Gold has done a lot better than Bitcoin in the last couple of years, last 4 years, but most people have bought Bitcoin. They haven't bought gold. But central banks are buying gold. I mean, they know what they're doing. They're buying gold. They're not buying Bitcoin. But eventually, I think private investors will start buying more gold. And I think the air coming out of the crypto bubble will help move that process along. In fact, I think one of the reasons that Bitcoin was able to do so well, from when it started until, recently, was because gold went sideways for about 12, 13 years. But now that gold has broken out of that consolidation, gold has now doubled in the last 2 years, and silver now is caught up, and now silver's at record highs. Silver's almost $60 an ounce, so it's broken through its $50 double top. So now we're in another stage of precious metals bull market where gold and silver are not going sideways. They should continue to go up year after year for many, many years to come.
In this video, economist and market commentator Peter Schiff explains why gold has quietly outperformed Bitcoin over the last several years, even while public attention has largely focused on cryptocurrencies. Schiff points out that although retail investors have flocked to Bitcoin, the world's central banks continue increasing their gold reserves, an important signal of where real long-term value lies. He notes that as the crypto bubble slowly deflates, more private investors may shift back toward gold, especially now that gold has decisively broken out of a decade-long consolidation phase. Over the past 2 years, gold has doubled in price, demonstrating renewed strength that many overlooked. Silver has now joined the move as well, surging to record highs and breaking above its long-standing $50 double top. According to Schiff, this marks the beginning of a new phase in the precious metals bull market, one where both gold and silver could continue rising for many years. With the global economy facing inflation, currency weakness, and financial instability, the trend toward real tangible assets is gaining momentum. This interview explores what could be the most important shift in wealth protection and long-term investing of the decade. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
When I transfer my Bitcoin to you, I've transferred nothing. I have nothing. I give you nothing, right? When I transfer tokenized gold to you, I've transferred gold. I've transferred the ownership of the gold. And what gives the gold the value is what you do with it as a metal. Gold has properties that other metals don't have, that other elements don't have, and it's needed. There are, industries that need gold. They must buy gold. They can't substitute copper or another metal. There are things that only gold can do, and companies need gold. Now, because gold is scarce, there's not just an abundant supply of gold. Because it's very valuable, but there's not a lot of it, then it's going to have a high price just by supply and demand. But even if people say, well, the real price, it's not, the investment price is $4,000 an ounce, but maybe it's only worth some lesser amount. I don't know. But the reason for the price, right? Price is always going to be determined by supply and demand. One of the functions that gold serves for central banks is it backs up their currency. It's a monetary reserve asset, and that's also a use for gold, and that helps determine the price of gold because you have central banks that need it, and they have to bid into the market to obtain it. But because gold doesn't decay, right, it doesn't lose any value over time. When I own gold, I don't just own what I can do with it today, but I own what somebody else can do with it in 1,000 years, in 10,000 years, because gold doesn't go away. I mean, the gold that was mined 10,000 years ago, it's still here. I mean, it doesn't go anywhere, and it's no different than it was in the past. And so gold's price today represents the present value of all of the uses from now until the end of time.
Sure.
You don't have that with other commodities that have a shelf life, that decay, they rot,
Okay.
right? Gold is unique in the fact that it never goes anywhere. If you look at who is buying the Bitcoin ETFs, right, that have been the lion's share of the buying before these corporate treasury companies, these are not, true believers. They are just buying it because it's going up. They're seeing all the hype, and they're being told, you got to buy this. It's the digital. It's going to go up. It's the new thing. And so people are buying it in their stock portfolios. They don't care about any of the qualities that you talk about that Bitcoin has. They don't care about any of that. They don't self-custody it. They're buying it in their brokerage account. It's a symbol. And they're looking at it to go up. And when it stops going up and it starts going down, they're just going to sell. They're just going to move on and take their chips and put them in someplace else. But if you have currency, and if your currency starts losing value in the market and you need to defend it, you need to prop it up, you need something to sell to buy back your own currency. And so central banks can use gold to do that, to secure the value of their currency in the market. You can sell your gold and buy back your currency and keep it propped up. So that's why the central banks need a reserve asset. You're speculating on a company becoming more valuable. When I buy Bitcoin is not going to generate more income in the future than it does now, because it generates no income now. Bitcoin is not an income producing asset. When I'm speculating on Bitcoin, all I'm doing is betting that somebody in the future is going to pay a higher price than I did. I'm just betting that there's going to be more demand for Bitcoin in the future than there is now, and that the price is going to be higher. So it's a pure speculation on price without any other factor. And so Bitcoin is far more speculative in nature than what people are doing in the stock market or in the real estate market. Now, most people, when you're buying a stock, I'm buying a business now that generates income, that pays dividends. Not all stocks are simply, gambling on the growth of a business that may or may not come. But Bitcoin is 100% speculation. In that I'm buying it solely because I believe that somebody will pay a higher price. And the only reason that person is going to buy it is because they believe that the next person is going to pay a higher price for the exact same thing, Peter, even though it hasn't changed at all.
In this powerful segment, economist Peter Schiff breaks down the fundamental difference between transferring Bitcoin and transferring tokenized gold. He emphasizes that when someone sends Bitcoin, nothing tangible is exchanged. No asset, no physical value. But when tokenized gold is transferred, real ownership of a scarce and essential metal changes hands. Gold's value is grounded in its irreplaceable utility. Industries rely on it, technology depends on it, and no other metal can perform many of the functions gold provides. Schiff points out that due to limited supply and constant industrial demand, gold maintains a high price through classic supply and demand dynamics. Beyond its industrial uses, gold serves a crucial role as a monetary reserve asset for central banks. Its permanence, gold never decays or deteriorates, means that owning gold today is also owning its value centuries into the future. Gold mined thousands of years ago still exists in pristine form, giving it a timeless economic role unmatched by other commodities. He contrasts this with Bitcoin's speculative nature. Bitcoin produces no income, generates no value, and depends entirely on future buyers paying higher prices. Many buyers of Bitcoin ETFs aren't true adopters. They are momentum traders who will exit as soon as the price stalls. Meanwhile, central banks rely on gold to defend their currencies, using it as a real asset to stabilize value during crises. This discussion reveals why gold remains the ultimate long-term store of value. Let's get into the interview.
Just like paper made it better, except once the government came in and corrupted it, right, then that was a problem. But it wasn't a problem for gold. It was just a problem with government. But the gold that's issued through a token, you don't need a government. You don't need any private, entity that has a good reputation and is trustworthy can tokenize gold. It doesn't need to be a government that does it. And now people could use that as money. And even if there's a lot of different tokens, they're all fungible because gold is gold. But I'm talking about merchandise, people that are selling goods and services, which would include, labor. Nobody quotes wages or prices in a fixed quantity of Bitcoin, right? You're not going to, it doesn't happen anywhere. To the extent that even somebody was to get paid in Bitcoin, they would have a salary in dollars or in euros, and then when it came time to get paid, they would try to figure out how many Bitcoin they need to equal that number of dollars or number of euros. It's not a unit of account like money, and it's not being used as a medium of exchange. But people, most of the Bitcoin, it's like traded on Binance, and people gamble with it. They buy it and they sell it. They day trade it or they hodl it, but they're not using it. I mean, as a medium of exchange. It's not a unit of account, and it can't be a store of value because you can't store what you don't have.
In this segment, Peter Schiff explains why tokenized gold represents real, functional money, while Bitcoin remains speculative and disconnected from everyday economic activity. Schiff notes that gold-backed tokens don't require government involvement. Any reputable private entity can tokenize gold, and because gold is inherently fungible, multiple issuers can still create interchangeable forms of digital gold currency. This preserves gold's monetary role without relying on political systems or central banks. He points out that real commerce still operates in traditional units of account: dollars, euros, and other fiat currencies, not fixed quantities of Bitcoin. Even those who choose to receive wages in Bitcoin still calculate their salaries based on fiat values before converting them. This means Bitcoin fails two essential tests of money. It is not a unit of account, and it is not used as a medium of exchange for real-world goods, services, or labor. According to Schiff, most Bitcoin activity is speculative. Without genuine economic use or intrinsic value, it cannot function as a true store of value. Gold, even in tokenized form, continues to represent actual ownership of a scarce, valuable asset required across industries and throughout history. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates. And comment below to share your thoughts on it. Appreciate you for tuning in.